Big tech losing some of its shine this earnings season. The latest example is Apple, tech giant, reporting its fourth quarter sales decline, and the stock is missing out on today's rally on Wall Street. Joining me now is Ray Wang, Constellation Research Principal Analyst, founder. Ray, thank you so much for joining us. I want to first, Ray, just get your take on Apple. Obviously, Ray, some investors are disappointed by that guidance for the December quarter, the holiday quarter. Others on the street, Ray, I did see make the case today that, listen, given all the macro concerns and challenges, they thought it was actually an impressive performance for Tim Cook's company. What was your take? What did you make of that print?
When you think about what's going on, despite continued revenues decline for a year, Apple is a digital giant flight to safety stock in bad times, and it's a growth stock in good times. So sales are down, but iPhone sales are at a record high. The problem is Mac, wearables, all the other devices. And that's what people are worried about. But services outshined everything else. And so people are saying, okay, fine, we can stick with this as a safety stock. We're not sure when it's going to be a growth stock. And that's what people are waiting for to hear about in the December quarter guidance. And so that's kind of where the issue was.
And Ray, let me ask you, because I was talking to Gene Munster over at Deepwater Asset Management. You know Munster, longtime Apple analyst, and we were chatting, and he continues to be an Apple bull. He is convinced that this company is going to return to growth next year. He sees better times ahead, Ray, specifically for that iPhone franchise, because Munster's point is pent-up demand, easier comps. I'm interested to get your response to that thesis.
Oh, I agree on the thesis, and it's not just the iPhone. You got a revamped Mac line with an M3 chip. Their operating margins are a lot higher than everybody else. Having the vertically integrated approach is going to help them. On the iPhone side, the services piece, if you think about it, it's not just hardware sales. It's the attach on the accessories, it's the attach on a cross-sell, and of course, it's what additional services you pick up. And the average revenue per user continues to go up. Now, there's an elongation of phone replacement cycles and Mac replacement cycles because everyone bought what they wanted in the middle of the pandemic. And so those are going to stretch out a little bit. And then, of course, there's the China factor.
And Ray, I want to switch gears here a bit. Let's talk about those hyperscalers too, those big cloud computing giants. Ray, we heard from Amazon and Microsoft and Google. What did you hear from their earnings reports, Ray? What did you learn about the ongoing cloud wars?
So the cloud wars are real. The three big players are at it, and Microsoft wants to be number two, and they've got the sales team to do it. But the challenge is they have the most antiquated cloud data centers. They use more power. They don't have enough capacity. The code is inefficient, but their head of revenue, Judson Aldov, is executing on all sales. Google has the best tech, the future TPU chips, the great engineers that are there, but the challenge is they've got sales execution that they got to deliver. And Amazon is still the leader in that war. Even though they're going to show slower growth, they've got an AI story they're about to tell when we get to AWS reInvent early in November, December.
And Ray, another big theme this earnings season was AI, artificial intelligence. There's a lot of companies, they're plowing a lot of time, money, effort into that technology. I'm interested, Ray, among the big tech players, are there certain companies that you think are actually better positioned than others to monetize that technology across their portfolio of products and services?
Yeah, it's been said a lot by the dip because Google actually is in the best place for that because they've got the chips, they've got the engineers, and this little war that got started by Microsoft has got them kicked into gear, and they're in a really good place for that. So, and then of course, if you're buying the tools makers, that's going to be on the Nvidia side because they're the ones providing those chips, but a chip war is about to break out on GPUs, and that's going to happen in the next 4 quarters.
And Ray, another question, and Diane actually raised it earlier in the show. When we talk about AI, where is Apple in that conversation, in your opinion?
So Apple's actually very interesting in AI. The AI just happens in the background. It's experiential. Suggestion happens. Your photos look better, right? The things that you're trying to do on a Mac on design just happen in the back end. Energy management just occurs. So they're doing AI. They're not talking about AI like everyone else because they don't see themselves as an AI stock because they realize that they don't need that to propel. So you see a lot of that built in. And from chip, if you look at the M3, the amount of AI that's being built into the chip, it's actually where it should be because we're going to see a growth in what we call AI computers that are actually at the edge. AI computing is going to happen because most of the data is happening in the edge yet. They're not all in the cloud. So they've got the right strategy by getting it right at the chip level and then going up the entire stack all the way up to the apps.
And Ray, we got Nvidia coming up now, spinning ahead. They're going to report later this month. What are your expectations for that earnings print?
Oh, I think they're still doing really well. People can't get enough GPUs. The wait times are 8 to 9 weeks out. And we're actually, despite the export control headwinds, there's tailwinds behind the demand just for AI. And that's for the next 4 quarters. But we're also going to see some competition because AMD, Google, Microsoft, Amazon are all building their own chips. And we're going to see chip diversity as an issue. I was just at the Dell Tech Summit last week. And, you could see what companies like Dell were doing with trying to get the right chips for the right workloads, for the right storage conditions. And that's going to be a big piece. And Nvidia is one of their big partners.
And Ray, you mentioned the U.S. export controls there and, having an effect on different businesses. When you think about China, Ray, as an end market, listen, it's not just Nvidia. There are any number of big American tech companies that look to China as an important end market. But given these geopolitical tensions, Ray, between Washington and Beijing, they are running hot. They're only getting hotter. How do you think American companies should think about the opportunity in China long term? Is it still big and healthy and vibrant, or do you think it's going to get smaller and more narrow?
I agree that it's going to get smaller and more narrow. Every CEO that's in an American company that believes China, if I can only get 1% of $1 billion market, which was the old pitch, that is out the door because we are at war. And it might not be an outright war, but we are at war. And you need to understand there'll be consequences of your investments in China. There'll be consequences if you're exposed to China. And there'll be consequences in terms of how you react to China.
Ray Wang, thank you so much for joining us today, Ray, for that insight. That was great. Appreciate it.
Happy Friday.